Good morning. This is Doug Campbell with Right Way Options, coming to you with a morning market preparation video for March 8th, 2018. So, Thursday, and we're looking at a market where we finally had a little confirmation of bulls holding on to support. That was a great thing yesterday. Obviously, the gap down was kind of brutal. But the fact that they held here, now we did whipsaw back and forth several times. We had a lot of travel back and forth in the market yesterday, moving up sharply after the gap down, moving all the way back down, and then finally recovering on the day. Now, the diamonds is the weakest of the indexes right now. The Dow is really lagging behind at the moment. If we look at the 50-day moving average, you can see we've got about the Dow will have to gain about 200 points to attack this 25,000 level. That could, it served as resistance here. It could certainly serve as resistance again, and then over 400 points just to attack that 50-day moving average. That is certainly possible to do. We've seen this market be quite volatile and move around a lot of points in a day. But there's some work here to do, and the Dow right now is lagging behind in that work. Now, futures currently are showing kind of a flat to slightly bullish open this morning, and of course that could change still, but just a little tiny bullish open right now as the market kind of chops us around, and it's really choppy in here and a little bit, well, I got to tell you, I'm cautiously optimistic. I'm cautiously optimistic that the bulls are gaining some ground here. But remember, we still have a lot of information that we have to get through today before that can be confirmed. Now, let's take a look at the SPY. The SPY is in a much better situation. You can see the SPY once again rallied back up to challenge that 50-day moving average. Was not able to breach it yesterday, but challenged that 50-day average from the underneath side. Now, keep in mind, this is a very classic blue ice failure pattern setup. All we need is a failure right here. Any kind of a failure candle could definitely send us lower. But like I say, I'm cautiously optimistic just simply because we held these support levels and we fended off that big sell-off yesterday. That's a good sign. Giving me some warm and fuzzies here for the market. Now, when we go just a little bit further and we look at the Qs. Now the Qs on the other side of things are the market leader. Right now showing very good strength, holding the 50-day moving average, bouncing back up here, maybe working to challenge the all-time highs here in the Qs. So everything is looking good here on the Qs. And in a surprising turn, IWM showed remarkable strength yesterday and following through. Now we have to be careful and realize this is 1, 2, 3, 4 days sharply up in IWM. At any time this could, flatten out and reverse. But as long as it holds above the 50, and this is a key support level right here, getting above there and holding above there will be really important. Notice we defeated the downtrend line here. And so IWM is looking strong. So we've got two indexes looking pretty good, but we got a couple big boat anchors, particularly with the diamonds. The diamonds just kind of serving as that boat anchor right now. And the SPY, on the fence. It's trying to make a bullish move, trying to break that higher, and we'll have to wait and see if they can actually accomplish that. Now, keep in mind that some of today we could see a lot of choppy price action today, and one of the reasons for that is that Friday morning employment situation report. Today on the economic calendar, you see we've got jobless claims. Jobless claims last week came in at a 49-year low. So if that continues to come in hot, the market may not like that, and we'll have to wait and see. Currently, consensus is suggesting we tick a little bit higher. We go from 210,000 up to 220,000, which may provide just a little bit of relief for the market. If you take a look at the rest of the calendar here, there's a bunch of reports, but really nothing that we would expect to move the market. So we need to run over here on Friday. Now, Friday before the market opens, we get the big government employment situation report. This is the report that could shed some light on whether or not we are experiencing inflationary pressures in the market. If this comes in hot, if the numbers come in hot, the market may not like that. However, if it comes in weaker than expected, then we could easily see the market respond well to that, meaning tomorrow kind of expect a gap up or a gap down in the market and plan accordingly for that. We could very possibly just do a lot of light chopping back and forth today, waiting for this report. It's going to be, I think, rather key to the FOMC announcement later this month. So kind of keep that in mind. Today, our biggest day of the week for earnings. We've got a lot of earnings coming out today. So kind of keep in mind that those earnings will be rolling out. Well over 200 companies are reporting today as this earnings season just continues to drag on. Let's take a real quick look at the VIX. Now, I think the VIX is really important to tell us a story here on what's going on. First, you know, here's that key level of support. And so far, we've been able to hold that. Yesterday, we actually showed a potential for a bounce and a higher low. It's nice that we continue to get that pullback. Remember, we have an uptrend here that we need to defeat, and we need to be able to drop below this key level right here. So kind of keep an eye on the VIX. We're still hovering over that 17 handle. So that means that significant volatility is still possible, and any news event could really send this market reeling one way or the other. So you have to plan for that. My suggestion would be, you know, if you are going to trade, and there's reasons to be trading, there are good stocks out there to trade right now. Good signals, everything's starting to show improvement. If you do trade, maybe consider trading smaller than normal positions so that you can hold through a wider range of chop, hold through some volatility events that could come. Keep in mind, remember, tomorrow morning, very likely either a gap up or gap down that we cannot control. So keep that in mind as you plan for the days ahead. Let's take a quick look at T2122. T2122, the 4-week new high, new low ratio, and we're still clear up here in this bearish reversal zone. And notice how consistent this is. We get up into this area and we typically pull back. So we're not clear at the top. We still have room to the upside to go here, but we have to recognize the fact we're in that situation where we could see a little bit of selling pressure. Remember, weekend coming as well. You know, a lot of folks will take off trades ahead of a weekend risk. Now, that may change due to the employment situation number on Friday, but we need to be prepared and think about those circumstances and how we're going to deal with the risk of that number on Friday morning and possibly carrying that over into the weekend. Okay, everybody, I want to wish you a fantastic day. I hope you all have great profits. I will see you bright and early Friday morning right here talking about that employment situation report. Everyone take care. Have a great day. Talk to you soon.